Hello and welcome to the Unusual Stories podcast. My name is Wojciech Salski. I'll be your host for today. And before we begin, may I remind you, if you'd like to support this podcast in any way, the best way is probably to hit the follow button or a subscribe button and share it with a friend or a colleague or a family member. And of course, if you'd like to share it on social media, support financially by following the link below, or just sending me a message and sort of encouraging me to continue, that's always much appreciated. And thank you very much to all of you who are supporting me for all those years now, and for the growing community that is out there that I see. And so, just wanted to acknowledge you and thank you for that. Now, before we start, just maybe a few words of introduction. As I mentioned recently, I've decided to create 5 additional episodes. This is going to be a sort of a special season, if you will, a mini season maybe, which basically will talk about some topics and books that might not be exactly the easiest to face. And this is a disclaimer, really, that even though I find these topics very, very important, and I mean, that's why I'm here. That's why I've decided to do those episodes and this and the next 4 going forwards. I understand that some of these topics and some of the ideas you might find really difficult to face. I know I did with a few of them. And so, in the spirit of not turning our back away, but gazing into the abyss and being courageous enough to at least ask ourselves questions about these topics, I've decided to nevertheless go forth and give you the opportunity to think about these. Now, of course, I understand if some of them will not be for you, and my deepest wish is for you to actually read the books that I will be talking about. I think that's by far the best way to really decide whether or not you agree with, what's being said here. If you don't decide to go through these books yourselves, then I hope that what you will hear on this episode and the episodes that follow before the end of the year will be useful enough for you and inspiring to take charge of some parts of your life and be more aware of the traps and difficulties in the different areas of the world that these topics relate to. So that's my hope, and I'll try my best. As per usual, I will not tell you everything. I've chosen, for instance, for today, I've chosen 4 major topics, themes, and I will mention some quotes. I might tangent into some ideas and thoughts from different episodes, but most importantly, I want to raise alarm about some of these ideas and let you consider them for yourselves. And if you do decide to dig deeper, I would encourage you to pick up the book and read it. Now, so we'll start by taking a sip of coffee. We'll start by addressing the book that I found the most troubling in terms of the scope of the problem itself, and also probably the the most difficult to address in a podcast of no longer than maybe an hour worth of speaking. So I've chosen a few themes here to deliver for you, but I would urge you to read the book yourself. So the book is called The Creature from Jekyll Island, and basically it talks about the idea of central banking and the banking as we know it nowadays. The book is really, really long, and even though it's not complex in a sense that the ideas, portrayed are well portrayed and understandable for everyone, I think the daunting part is digging through it, because it's a hefty hefty piece of work, let's say. So the authors dive into the exploration of first history of monetary systems in general, and then by showing us examples from the past, and then slowly but surely working up to the present, they expose the corruption, and corruption not in a sense of someone bribing another, rather the potential for faultiness of the system itself, which banking as we know it nowadays has become. And I was thinking what would be the most beneficial for me here, for you to be exposed, and I'll try my best to explain these concepts, but please bear with me. Understand that I'm only a human as well, and I would urge you to read the book, of course, and explore these concepts further if you find them interesting, but don't fully comprehend them. So, if you know anything at all about banking these days, the majority of countries worldwide have a central bank of their own, which in some countries is called the central bank, in some countries it's called a monetary fund or a federal reserve, for example, in the United States. And this entity is a sort of on the side of, by the side of a government, and in many ways it collaborates with the government in regards to the country's monetary policy. Now, these are all well and good ideas. The problem, though, is in the pudding. So the system itself is set up in a way that if you know how true money and value of resources work, you can spot very quickly how faulty such a setup, which allows people and officials, this Federal Reserve officials or governmental officials, to manipulate the money circulating in the country, for example, how it is likely to be faulty and cause more and more problems. Now, to portray this, let's take a step back, and we'll have another episode about the Bitcoin Standard book, which will explain it even a little further. But just to understand, money, in terms of in general, money is a medium of both exchange, but also keeping the value of your, for instance, purchasing power going forward. And the one more thing that we need to note is money should be divisible, easily divisible. Otherwise, it becomes a problem. So let's put it this way. Imagine you have a room with 10 apples, and everyone has one apple. As long as apples are quite challenging to get, and it is quite energetically inefficient to suddenly flood the room with 10 more apples, your apple is worth quite a bit, right? It's a 1/10 of the whole supply of apples. Now imagine that suddenly someone shows up in the room and floods the room with 50 apples. Now, if you've kept your family security, for example, your family financial security in this apple you had, and suddenly the market, the room, is filled with 50 more apples, the value of your apple went down significantly, maybe to the point that you're no longer able to sustain your family through this apple. Now, this is exactly what happens when inflation takes place. And inflation is basically a process of the value, the nominal value of one unit of money going down because, for example, the market is flooded with similar units of money, and usually it's also flooded by very cheap, inexpensive, in a situation of central banking, for example, literally printed notes. And why is this important for us to understand? Why am I starting kind of in the middle? Is that the book itself proposes the thought that central banking is the world's largest and most successful scam. And anyone who truly understands the nature of money will agree. The thing is, because there is suddenly someone who's in charge of allowing, for example, the bank to print $10,000 more if it needs, if the country needs it, so to speak, or whoever, because we could argue whether the country really needs it and what the country is, then your way of keeping value in that dollar is compromised, right? There is this saying, savers are losers, and it's for a reason, because over time we can see, and you can feel it in your pocket as well, that even though maybe your pay rise has been, noticeable, maybe you do earn more these days than you earned before, you can buy less for more dollars, or you can buy less for the same amount of dollars. And this is the problem, for example, with fiat money. And fiat money is basically money by decree, money by the government, money by the local power, local force. And the major problem here is that, for example, in the situation of a central bank or a Federal Reserve, if you live in a system, or if you allow a system where there is one particular group, maybe a group of people or a group of organizations or a group of influence that has the power to undermine the supply of money within that system, over time, whoever, even though they are not a productive group, because let us remember, if it is not productive to print more money, if it's kind of for free, as long as someone signs off and agrees, then that's not really a productive activity. And yet those who are productive, for example, a local farmer who's, taking care of his crops and then selling them for money and then saving that money for the future, is suddenly exposed to these, organizations or people or this power that can print more money and therefore legally take away the value of his money. Because if you keep $100 for yourself for the next few years, while the Federal Reserve keeps printing and managing the money as they do, you will see, and I bet you've noticed it already if you live on this world longer than, maybe 10, 15 years, if you're aware basically of the prices changing, that you can buy less with these $100 going into the future. Now, this is the thing. The interesting point to make about gold, for example, which throughout the ages, for basically as long as we can see to the past, has kept its nominal value on a fairly similar point, at a fairly similar level. It is so because it is very cost inefficient to mine more gold. So it's very difficult to suddenly flood the market with more gold, therefore taking down the value of that gold, which is why gold is known to be a sort of a safe store of value over time. You're unlikely to earn much on investing in gold, but you're also unlikely to lose the value of money if you place it in gold, because over time people cannot simply print more gold. And an interesting sort of fun fact that is about gold is that apparently the same amount of gold, about an ounce of gold, can buy relatively similar kind of type of formal clothing, a suit, one could say, than it did back in 1800s, as it does nowadays. So even though for the same amount of fiat money, 50 years ago, you cannot buy the same amount of stuff now, you can still buy similar amount of things for the similar amount of gold over time. And as we can also notice if you've seen how gold price spiked recently and has been growing significantly over the past few years, especially in the times of crisis, of financial crisis, which is caused to a large degree by the system itself being faulty, as the value of money, fiat money like currency, goes down, the value of store of value such as gold or Bitcoin, of which I will talk about in a different podcast, may rise up, which is a sort of a side effect, a buoyancy side effect of that inflation of the fiat currency. Now, the important here, one more point to note, and I don't want to dive too much into this. My introduction here is just to point out that basically the banking as we know it nowadays is not necessarily the only option and is definitely a faulty one. The book points out an example of central banking experiment taken place in 1823 when in the United States, in 5 years, the citizens who held or saved their money lost, due to fractional reserve system in place, 42% of their money value. And there were 3 attempts at creating central banking system in the United States, and the third one succeeded, which is the creature from Jekyll Island, which the name of the book suggests, which is basically an island where the bankers, the most influential bankers of the time, met and decided to form a cartel and called it the Federal Reserve, has actually appeared. So Central Bank of England was the first central bank of the world, but the most influential in terms of spreading over the world over time is the influence of the Federal Reserve of United States. And if you want to dive deeper into that rabbit hole of a problem that I've sort of outlined here, then this book is definitely for you. Now, an interesting thing to raise is Thomas Jefferson's approach to money and to central banking. This very renowned individual and a founding father of United States pointed out during his career that allowing banks to create money could only lead to national ruin. And the book, The Creature from Jekyll Island, raises this quote: "A nation that resorts to the use of fiat money has doomed itself to economic hardship and political disunity," which basically means the inevitability of fractional banking, turns fiat currency and exacerbates these effects. Now, the point here to make is that unless it is the market which can allow and establish the value of whatever resources you have, if it's centrally organized, there is always an incentive to be corrupted, and also the likelihood of faulty thinking and mistakes. And even if everyone in those organizations would have the lofty idea of making everyone more happy and better, it is an arrogant and faulty approach to assume that us, as limited humans we are, can anticipate the complexities of the market and therefore steer it in the right direction. You know, the most recent example of that is the tongue-in-cheek example in Biden administration, which passed the Inflation Reduction Act, which actually exacerbated inflation. Because we, as much as we can look at the charts and anticipate and analyze, we cannot simply comprehend the complexity of the world market and the economy, which is not only reacting to these choices we make, but also reacts to itself and to the choices it makes at all times. And my message to you, a practical message to you based on just these two little introductory ideas, is become more aware of this open robbery that you're affected with whenever the central bank of your country decides to print more money, which at the moment the majority of countries do on a regular basis. Because the major fault with the system of fractional reserve banking is that you over time have to increase your debt. You need to print more to pay for your obligations from the past. And the sad but true realization of this system is that over time we take from the future to support the present, and this just accelerates. This is why there is such a huge problem with, for example, the national debt in many countries, such as Poland, United States, or United Kingdom. And, without going too much into detail of debt itself, if you think about it, debt is drawing from the future into now, right? Like if I don't have the money to pay for my coffee, for example, today, I can take a loan and sort of buy now, pay later. And it's all fun if you're really bent on getting the coffee right now, but realistically, the truth is you cannot get that coffee. So you're taken away from the future self to support that coffee today. And of course, as we know with many other areas in life, it is unsustainable to live in this way. So just a thought for you to exercise. How come we agree to such a system being in place for the most, if not one of the most important aspects of our lives, which is the financial health and security, while, for example, we are aware in other areas of our lives about it and we don't agree. So, for example, we've talked about again and again on this podcast about the instant versus delayed gratification, right? Like, I can go to the gym today and make an effort even though I don't want to. And I can refrain from eating sugary sweets today even though I don't want to. And I'm delaying the gratification of feeling better, stronger, healthier tomorrow, in a month, in a year, in 20 years. I can turn that around and assume I'm gonna enjoy everything right now all the time, and I eat all the sweets, I indulge in all kinds of, drugs and everything, and I don't care about the future. Well, the thing is, I'm literally drawing a credit from the future. I'm taking a loan because I'm exhausting my resources of my health instead of investing them right now. And therefore, in the future, I'm more likely to be to fall a victim of disease, obesity and all kinds of troubles. That's basically the same with the sort of fractional reserve system in place, where credit is king rather than true productive activity and the store of value takes place. The one thing that this system also allows to accelerate, and this is especially important for you to realize if you do not agree with the growing disparity among like the ruling class, you may call them, people who have a lot of financial security versus those who barely make their end meets. The thing is, if you store money, if you store your resources in fiat currency, when the central bank, for example, prints more money and inflation takes place, you are the one who is being robbed. Your stored value is being transferred to the system. Who's getting richer? Well, of course, people who have their money in other assets, such as real estate, such as gold, such as Bitcoin, things that cannot be printed. And since the printing raises the number of money available, the number of fiat currency available within a system, so your little piece becomes even smaller over time in comparison, this also means that the value of these assets that are other than cash will rise. And this is an invitation from me to you straight away to do, regardless of whether you'll read the book, regardless if you're going to be, picketing outside the central bank to change it, or if you're even going to bother about it. This is a big problem, and it's probably not a problem. It's probably big enough for us not to simply abolish it, and that's that. We'll see what happens in the United States going forward with the Federal Reserve and the growing national debt. But what you can do is you can diversify. And this is something we've talked about when we discussed the episode, Let's Talk About Money. Since now you know that by keeping your finance in fiat currency, you're likely to become a victim of this printing, but you also know that you will potentially even earn and get more value if you place some of your funds into other assets than fiat currency. Now you can take action. And for example, myself, I've been placing some parts of my savings in other alternative opportunities such as Bitcoin or gold. And over time, even though I still have cash to hand, to pay for my coffee or for a rainy day, so to speak, I know that I'm not fully dependent and sort of I'm not fully liable to central banks' likelihood of printing more money because the government yet again overspent and they need some loan. So yeah, that's the main point here for you to take away. Now, on to a bit more troubling, if that wasn't troubling enough, idea. And let me just take a sip before I dive deeper into this Pandora's box. An interesting thing that the book's authors point to, and also a troubling one, is the thing of this, and this is yet again, we'll go back to history and then we'll come to today's world. In a system where you cannot print money on demand, you cannot create a sort of money out of nothing. For example, if we had a country such as countries before the First World War in Europe, some of them at least, where gold was the standard. So, for example, if you wanted to raise an army and invade a country, next to yours, you had to pay from the coffins of your treasury, and they physically had to take the gold, pay it to those mercenaries, or to raise your army, and you went to war. Well, first of all, the war was finite, much more finite than with the credit system, and secondly, it was usually unlikely to last for long, because it was a matter of either it was a sort of the success of your campaign was a mix of both how much you can spare for the army and also how efficient your army is at winning, right? Because if you go to war and you spend all your treasury in 1 year, and then it turns out that the war is supposed to last for 3 or 4 years, well, unless you get someone else to support you with their army, or unless you raise more funds, and it's very difficult to raise more funds if there is nothing else left in the country, then that's how the war ends. Which, just as a disclaimer, all kind of war, whatever, I don't think is good. I think we're way past the times when we had to truly fight and kill one another to resolve conflicts. Unfortunately, it's not the case still, and many places are still troubled by war. But the point here is, in the times where the sort of the government and the local treasury was unable to raise funds infinitely, war was not possible to be perpetuated. We've not experienced a world war-like experience up until the 20th century, and it is for a reason. It is because beforehand, the majority of governments used some sort of standard, gold standard, silver standard, and so forth, and they've not used credit as their main sort of driver of fiscal policy. Now, the change happened in the First World War, and earlier on there were a few examples as well during Napoleonic Wars, where suddenly the bankers realized, and Rothschilds are pointed out again and again as the major player in this area throughout the book, they've realized that if they can offer loans to both sides of the war perpetually, they can basically make money on both sides, hedge their bets, and infinitely become richer by making the countries fight infinitely. And of course, it was also very, sort of attractive for the countries themselves, because the government was able to raise more army than ever before. The problem with this is, though, you're yet again drawing credit from the future, and you're also prolonging something as atrocious and awful as a war. Millions died, and I'm pretty sure millions are still dying over time because of the perpetual wars that we've been having. And the First and Second World War were the biggest of them all. And unfortunately as well, they were also examples where bankers would loan from both sides to both sides, really just earning money while the world is burning. And this is something that the book's authors point out, that without fractional reserve banking, war, sort of perpetual war mechanism would not be available. It would just simply end the moment one side runs out of funds. And some quotes here to share with you is: wars are possible ad infinitum via debt, and debt is created by the war. But since fractional banking allows debt to be turned into funding, it is therefore a full circle. You can perpetually draw and draw and draw more debt and cause more and more misery. Another quote from the Rothschild formula, which is basically the formula that the Rothschilds came up with setting up a system so both sides of the war are financed by them, and they earn on both sides through it, is: truth is the first casualty in war, money is the second. And the final thing here to point out is, at this point, and maybe I'll go on a tangent for a bit after that, is that in a place, in a system where people who are in charge of choosing whether to take credit, to draw from the future, to borrow from the future, are not the ones that will be paying the costs of that borrowing, it is very likely that they will be happy to draw more and more, especially if they're actually making money out of it. And the way banking works, if you are familiar at all, I'll try to outline it sort of as much as I understand it, but of course feel free to read the book. I would encourage you, and inform yourself further. In the system that we live today, banks in many countries are obliged to keep 1/10 of their deposited funds in actual deposits, which basically means if I have $10 and I go to the bank and I place it in my account, it will instantly take 9 out of those $10 and lend it to someone else. And it lends it for an interest, which is basically a charge that the bank will, a sort of a price of that activity. And yet again, as the interest comes by, $10 come back, and they take away $1, place it in the bank, and they lend 9 more. So over time, they can turn this again and again and again. And even though the bank itself did not make any productive activity, by the time you leave the bank, they have already used your $10 for potentially 9 different transactions. And it sort of spirals ad infinitum. And an interesting thing and a troubling thing for me to note is that many banks don't even keep the 1/10 rule anymore. And for that, I will refer you to Ray Dalio's How Economic Machine Works. I'll put the link below. I'll take a note for you of that, actually. Because it is not as complicated of a system as they make it, and they make it complicated because that way they can, the financial system, the financial policy, makers and all that, the Federal Reserve, because they want to keep you in the blind. They don't want you to know. Why would they want you to know that it's a huge scam? and that they're making money out of nothing while you're losing your money if you're keeping it, in currency. So yeah, that's a troubling thing to think about, and I know it might be troubling in general for you to even begin. Now, I'll finish with one more topic, but I want you to be aware that this topic in particular is definitely one of the more contested ones nowadays, and I can imagine it being difficult enough for you to address that I would just ask you to read the book. If by now you found this episode useful and you want to know more, read the book, and then you will be able to also read and understand in much greater depth what I'm about to say. Now, sometime in, I think, 1980, I don't remember the year exactly. No, 1960 or something. There was a report made, and the report is called the Report from Iron Mountain. And in that report, basically a bunch of analysts and strategists and basically academics, on behalf of a group of influential bankers, made a sort of an analysis of what can this creature from Jekyll Island, the banking system, the ruling elite, if you will, the group of people that are in charge of these huge organizations with growing influence, what can they use, what can they do to ensure sustainable, for themselves, of course, and for their organizations, growth and support for the future. And they were basically discussing the modern slavery opportunities and options. And the interesting thing here is to note that they've obviously had the understanding of both world wars, and they recognized that world wars cannot really work perpetually, because over time, even countries that draw credit, they just go into ruin. War is hell, and it's not a sustainable system unless there is a constant threat, constant enemy to contend with. And it's very difficult to to convince all generations, every next generation coming up, that the war they're engaged in is still useful. And at this point, it's important to note that they were inspired in no little way by Orwell's 1984, which I would definitely recommend you check out, and I might actually make an episode on it if need be, in which such state of perpetual need for threat and war is actually described. So please refer to that and dive deeper. So among other things they've raised in the report came up ideas such as global viruses, maybe global health crises that they could use, as well as environmental threats. And over time, this report, even though it's not really, there is no straightforward proof that report went any further than to inspire a bunch of people to discuss a bunch of things, the authors of the book suggest that the outcome of the global organizations' work over the past years since 1970 are definitely, according to the authors, inspired by these discussions. So, International Monetary Fund, World Bank, World Economic Forum, and organizations such as World Health Organization have grown into power since the Second World War. And in 1970, the first World Earth Day was organized. And obviously the solution to the trouble of sustaining constant funding for these influential groups and also raising influence over time became the idea of global government. And there are many of global governments nowadays. The most iconic out of them all, the most troubling to me, is the World Economic Forum, which seems to have plenty of ideas how we should live our life going forward. And the book points out the way in which over time these banking moguls and these organizations, even though they might advertise themselves as supportive and helpful for the public and the world, can steer the world in a direction that will make the world more and more dependable on them. And the International Monetary Fund, for example, and the World Bank are basically organizations that are like a central bank to the central banks, which is basically just taking a notch up on that pyramid of stealing and taking away money from one and taking and putting it into another. And as I said, this is a troubling thing, right? Environmental crisis, as difficult as it may be, it definitely seems to me like it's a ripe ground for organizations to take advantage of, for example, carbon emissions, financing and stuff like that. One could ask themselves then what this means if the report from the Iron Mountain truly did influence them, and if maybe those people who were in charge of forming a Federal Reserve banking also decided that the environmental crisis is the topic that would raise enough fears and be perpetually a problematic thing, so people would agree on giving up some of their rights for the saving of the planet. Wouldn't that be a troubling thought? What do you make of it? What do I make of it? I don't know. For me, the idea that, and this is a quote actually here, truth doesn't matter, repetition and media participation does. For me, the idea that, and I'm pretty sure it's quite visible, it has been quite visible over the past few years, especially in terms of the elections happening in the United States, with the legacy media basically perpetuating lies without literally lying through their teeth and without really remorse and without anyone to check them, because obviously, they were all on the same side. It does make me wonder just how much of this book is on point. And that's why I've decided to share it with you. What you make out of it, it's your choice. I would encourage you to read the book if you think this episode was somewhat troubling enough for you to, maybe even pause. If you've had a moment of hesitation whether to listen, or maybe I made you feel angry, maybe there were some things that were said that felt so wrong that they would potentially have a that would have a potential of making you distrust the whole concept of the government. If any of such strong ideas and opinions popped into your head, or maybe now you're angry at me that I even started the topic, those are probably all fair indicators that these topics should be explored, even if only for you to make your own opinion about them and discredit them because of that opinion. Because the worst thing, in my opinion, we can do is be ignorant enough to turn away from ideas. And so I would encourage you to consider it. I would encourage you to have the courage to consider it. Now, for the invitation of this week, I have two. One is obviously to diversify your portfolio if you have any savings, and simply trust when I say that even if this book does not portray 100% of truth, of which I think it does, but let's say it doesn't hurt for you to diversify your finance and therefore become better into the future. Just hedge your bets. You wouldn't, unless you really want to, unless you're so risky, but you wouldn't bet on just one, thing unknowingly, especially if you see that over time you did lose some value of your money because of your savings. Become more open to learning about the financial system, and trust me when I say it's not as complicated as it seems. I'm certainly learning still every day, and I'll put the link below to a interesting podcast called the What is Money podcast, which might help you understand better the financial system. But don't turn away. Don't turn your gaze away from these topics. And my second invitation, of course, is read this book. Listen to it on Audible, read it and face it, consider it, and decide for yourself whether or not some of these ideas might be impactful. And of course, I've only just scratched the surface for you in terms of what this book has to offer. It just so happens that within 50 minutes or so, I can do only so much, and I don't want to overextend to the point that I don't deliver the value for you. So I would encourage you to read the book as well. And of course, if you found this podcast useful and interesting, please support. It means a lot. And I hope that it's worth your while. Other than that, have a wonderful, wonderful week. Don't worry too much about these things, but be aware of them and worry enough. Like Ray Dalio said, if you do worry, you don't have to worry. If you don't worry, you have to worry. So make sure you worry a little now so you don't have to worry later. Have a wonderful week. Stay happy, stay healthy, and I'll see you next time.